Hey everyone, there's been a lot of talk in the media and in studies and so on about how there's record deliveries of apartments going on right now all around the country, especially in certain markets, and that's causing problems with declining rents. However, what we're going to see in about 2 years or less is a shortfall of new deliveries of apartments relative to demand. A lot of people have talked about that within the industry. You're probably all aware of it. But what I want to do in the next 10 or 15 minutes is show you the statistics that prove it and sort of the most likely trajectory from a quantitative standpoint. So if we take a look at the numbers on completions, we are already seeing a somewhat of a decline, a pretty significant decline in completions, and we're not even through with 2024 yet. Meanwhile, we're seeing a lot of demand and a lot of absorptions of the units that are being delivered. We're going to show that quantitatively. What this graph shows is that we are past the peak. The peak was actually a year ago in terms of deliveries or completions of apartment units. And this blue bar, the tallest one, is your discretionary Class A institutional grade types of apartment buildings. The others are mid-range, workforce, affordable, and so on. Now, what we're going to see is a continued decline of completions because of the following. Look at this graph. This shows you starts and completions. The sort of orangish color bar is starts of multifamily units, down about 80%. That's a huge drop. And what that means is, there's certain things that are hard to forecast, right? There's an old saying, it's forecasting is difficult, especially when it involves the future. But it's actually pretty easy to forecast completions when you know how many starts are occurring because you just project forward. And so the completions are already coming down, starts have crashed. And that's good for those who own and invest in and build apartment buildings that are getting started today. Construction starts are down about 90% for that discretionary kind of building. And that's what's shown in this graph. Huge drop off. And of course, that's going to mean a dramatic drop off over the next year or year and a half in completions of these types of units. Depending on the type of unit, that determines how long it takes to build it. And this has been talked about a fair amount, not as much as I think that it should have been talked about. And I wrote an article shown here that was in Forbes magazine, and it's about excess supply of apartments now, but possible shortages by 2026, 2027. So let's talk about the demand side and quantify that. We saw very strong demand in the first quarter and the second quarter of 2024. And what that is showing is that those units that are being delivered are being absorbed very rapidly. Occupancy rates are staying high. And when we look at the third quarter so far, it looks like the third quarter could be as strong as, if not stronger than, the second quarter. And that's extremely encouraging from the standpoint of those occupancy rates and rents. This is the forecast of completions going forward. So we're taking that analysis and then sticking our neck out and doing a forecast. So you see 2024, you are here. 2027 is when we get all the way down from the current peak of 550,000 to around 320,000 completions of apartments. And that's below the level of demand. Demand is between 300 and 350,000 a year historically, and that's on a pre-COVID basis. Looking around at markets in Florida, we see that demand is surging so far in 2024. The blue bar shows you how many absorptions have occurred in the last 12 months in each market. Orlando and Miami and Tampa, very strong. And the green line indicates the pre-COVID average absorption rate, 2028 to 2019 average. So Orlando is more than double its normal average. Miami's a bit higher, Tampa's higher, Jacksonville's way higher, and so on across the entire state. I want to also touch on build to rent single family. We're going to see pent-up demand in this arena as well. What we're going to see, in my opinion, in my forecast, is a drop of about 50% in the level of starts for build to rent single family. It could even be steeper than that. Based on land sales for build to rent, it looks like it may well be steeper. But what I'm expecting is that there will be some people that will decide this is an opportunity to get into the market, to step into that void and take advantage of that pent-up demand that's going to occur by 2026. It also reflects that the public home builders will probably pivot a little bit more into the build for rent space as they continue to struggle with sales with the high interest rates that we're seeing today. That concludes my remarks, and I would encourage anyone to contact me with questions. Happy to engage on this topic, but I just wanted to kind of cover some of these quantitative aspects for you. Thank you very much.